Well, hello, everybody. We were going to do a very different video today, but in light of the tariff changes and some other things, and just some of the conversations that I've been having with clients, I decided to do a little bit different of a video today. We're still going to walk through the slides, but we're going to kind of do it under a little bit of a different microscope. And the topic is, will tariffs ruin real estate? And I think that's a question I've gotten some variation from just about, gosh, I don't know, I think 10, 12 people by now have reached out to talk to me directly and have that conversation. So we're going to go ahead and have it here so that all of you can have that benefit. Let's get started. My name is Stephen Meade with Domicile real estate for people who love houses. And this is our Southern California housing market update. And we're really going to talk about tariffs and what that might mean. And one word of caution, kind of before we talk about some of the effects that I think we're going to see. One of the big things I want to talk about is that some of these changes are going to affect different price ranges differently. And why is that? Well, it's for the same reason that a lot of our price ranges are affected differently. The economic implications of some of these changes that are going on, they will have very different effects for somebody who, say, is buying their first home, financing most of it, than from, say, somebody who might be selling another home, using money from the stock market as a down payment. I mean, these are all factors that will vary quite a bit greatly on exactly what effect these tariffs will have. The other thing I want to talk about just for a second before we get started is that, we don't really know exactly to what extent these tariffs are going to stick around. Just to give you an idea, several companies, Mercedes-Benz has said they are just going to basically eat the tariffs through 2025. I think they have a certain amount of faith, right, that they think this issue is going to be resolved before too long. So bear that in mind that this situation is very fluid and could change rapidly. So in order to keep us from spinning in circles, I'm going to talk about today as if the tariffs that are here are largely here to stay. What is that going to really mean for real estate? What is that going to really mean for buyers and for sellers? So let's go ahead and get started. We're going to jump in here, and I'm going to run through kind of our usual things, but we're going to actually talk about how the tariffs might be affecting those things. So let's go ahead and start off. When we're talking about inventory, what do I think this is going to do for inventory? I actually think this is going to have a little bit of a chilling effect on inventory if we wait. So I will tell you right now, our inventory levels are higher than they've been really in the last few years, which is great news if you're a buyer out there. You actually have some selection, but they're still not at pre-pandemic levels of inventory. And I think these tariffs, if they stick around, they're going to have a chilling effect on inventory, and that's primarily because of interest rates. And also because of inflation, right? I think there's going to be this question of, especially in markets like Southern California, we have a lot of things that keep people locked into their homes, between having ultra low mortgages, which is a problem nationwide. But we have an additional thing here in California, or an additional two things. So the first thing that we have that makes people way more sticky in their houses is our Prop 13 property taxes. There is a huge cost. The more your home goes up in value, the greater the cost is to actually upgrade and go to another home. So home prices get supercharged, that's just going to make that effect even more pronounced. The second thing that we have regarding kind of another sort of lock-in effect, as you will, is capital gains, right? And so unless Congress changes the capital gains limit, and also understanding California treats capital gains as ordinary income, that also means the longer you wait to move up, the bigger tax bill is going to be. And people generally don't like just giving money to the government. So I think that's going to actually have a chilling effect on inventory if these tariffs stick around. If you see, we already actually off to like a pretty busy spring. So we've got really a healthy amount of new listings coming on the market under 1 million, and a huge jump in that 1 to 2 million category versus a year ago. If we look at our new escrows, we're a little bit higher under 1 million, and a decent amount higher in the 1 to 2 million. But I will tell you, while that number overall, we've got more buyers going under contract on homes this year than we had last year, we're just really not seeing a level that's commensurate with the rise in inventory. And I know I've talked about that in the past. I'm not sure all this inventory is real inventory. I think some of this is sellers testing the market, kind of a make me move kind of a situation. If we look at our absorption rate, right, that shows you we're a little bit lower than we were last year, and we're kind of more in that normal market zone. I think, if you're a buyer, this is obviously great news. But, I'm going to tell you something too. If you're a seller, which in California means you're also likely a buyer somewhere else, this is also some good news for you. I think having a market that does not feel like crazy town in terms of that imbalance between buyers and sellers, I think that's really important for an overall healthy real estate market. So, even if you're a seller, this might not seem like good news, but trust me on this, I think this actually is good news. If we look at our closed prices, we're starting to see a little bit of gains here in the spring. I find it interesting that entry level price point is showing a little bit of softness, whereas that median and the upper end are definitely showing upward trajectories from the end of last year. Right, we're definitely seeing a little bit of a rise. We're almost back to that like late spring level already, even though we've still got a couple more months to go. I think a lot of economists are predicting this year somewhere in that 3 to 5% price appreciation. Though I'm going to tell you again, I think the tariffs could really upset this. I think one of the things that these kind of tariffs will cause, if they stick around, right? Again, that's a big if, but if these tariffs stick around at similar to the same level they are at now, I think you're going to find there's going to be a really big growth in asset prices. And the reason we're going to see that growth in asset prices is because we're going to have inflation, right? And I will tell you this, owning a home is probably one of the best hedges against inflation. And it's a great hedge for two reasons. Number one, housing assets and rents tend to go up with inflation, right? Or usually more than inflation. So you've got that benefit. But the second benefit is if you have a 30-year fixed rate mortgage or even a 7-year ARM or whatever you have, if you have a fixed rate portion to your loan, as inflation goes up, you are paying off that loan with post-inflation dollars. So inflation reduces your savings, right? If you've got $100 in the bank and inflation happens, that $100 doesn't buy you as much after a year. Well, the exact opposite effect is true when it comes down to loans. So your debt is actually deflated when there's inflation. So this is really could be a huge benefit to anybody who's a homeowner, and that will reflect itself in higher home prices. If we look at our percent still active after 14 days on the market, that we're still seeing really be still at a pretty active level. Remember, lower is more competitive in this market, but we're generally seeing ourselves in the range that we've seen for the past year, not breaking any new ground. Our close to list ratio, that did drop down a little bit towards the end of the year and then bounce back, but we're really trending right near 100%. Again, I think this is a sign that in terms of ready and willing sellers, right? I'm not talking about the sellers who are just putting on their house on the market and hoping for the best. Between ready and willing sellers and ready and willing buyers, we actually have a kind of an almost balanced market at this point. I think that could change and upset a little bit depending on some of the things happening. Again, if these tariffs stick around, I think that can put a lot of upward price pressure on things because you're going to actually have some buyers with a little bit more money in their pocket. One of the side effects of inflation is that wages do tend to also grow. If we look at our days on market for new contracts, this kind of tells you and maybe hints at something. We're seeing the homes that are finding buyers, right? Not just all the ones on the market, but the ones that are actually finding buyers are finding them sooner. And you can see that both under $1 million and in that $1 to $2 million price category. So what does that tell me? Again, I think that just gives us some validation of that theory that not all of this inventory is real inventory. It's not all motivated sellers who are willing to sell their home at the market price. I think it's kind of some hopeful sellers, maybe we'll say, or dreamer sellers. Now, if we look at our affordability index, this is one that does give me a little bit of pause. We've seen some rate increases, and what that's doing is that I think is having the effect of causing a little bit of a spread. Now, if these tariffs stick around, again, sticking to our theme here, you're not only going to see inflation in home prices, but you're going to see inflation in rents. And what does that do? That just kind of moves this whole graph upward. All three of these items would move upward. Finally, we're going to take a look at prevailing mortgage rates. Now, unfortunately, this graph does not incorporate the data of the last 2 days. We are in a very unlucky and unusual situation where the stock market and the bond market have crashed at the same time. That means rates have gone up and asset valuations on stocks have gone down. But I'm not so sure a lot of this is permanent, right? Because like I said, I think there is going to be an upward movement on prices in general. These tariffs do stick around. What does inflation cause? Inflation causes stocks to go up and interest rates to go up as well. Well, that's pretty quick for you and a bit of our kind of lightning round here on this. I hope this has been informative for you. We really try to practice deliberate, intentional, and strategic decision making when it comes to real estate. If that's the kind of buyer or seller you would like to be, we'd absolutely love to work with you here in Southern California. Our contact information is below. Don't forget to like, subscribe, and hit that notification bell, and we will see you again real soon.